Tesla has always been a polarizing brand, but a shocking new poll has revealed just how much public sentiment has shifted against the company. According to a recent survey, two-thirds of Americans now say they wouldn't buy a Tesla, and the reason isn't the cars themselves, it's Elon Musk. The poll, conducted across a broad demographic sample, found that many former Tesla supporters have been turned off by Musk's political statements, erratic behavior, and controversial leadership decisions. This shift in perception has been particularly dramatic among liberal and younger consumers, who once made up a key part of Tesla's customer base. The core finding of the poll is that 67% of Americans no longer see Tesla as a desirable brand. While some cite competition from other EV makers, a majority specifically point to Musk's influence. His outspoken political views, erratic tweets, and frequent controversies have alienated a significant portion of Tesla's original fan base. In contrast, a minority of respondents, mainly conservatives, believe Musk's leadership is a positive and see him as a free speech advocate. However, this small shift hasn't been enough to offset the much larger decline in overall favorability. The perception of Tesla has transformed from an innovative, forward-thinking company into something more divisive. The brand was once synonymous with progress, sustainability, and cutting-edge technology. Now, it's increasingly seen as a company that reflects Musk's personal brand, flawed, unpredictable, and controversial. Tesla trade-ins are at an all-time high, with former customers switching to other EV brands. New Tesla registrations are plunging in traditionally strong markets like California and Washington. Luxury competitors like BMW and Volkswagen are benefiting, with their EV sales rising while Tesla's shrink. Wall Street has taken notice of the poll's findings. Tesla's stock has been underperforming, and analysts warn that consumer sentiment is a leading indicator of future demand problems. Investors are growing concerned that if public perception continues to sour, Tesla's long-term growth could be at risk. Some crisis management experts argue that Tesla can turn things around, but only if it rebrands and shifts focus back to its products rather than Musk's persona. Others believe the damage is more permanent. Once a company loses trust, regaining it is difficult. For now, the data is clear. Tesla is facing a serious reputational crisis, and unless something changes, the consequences could be long-term. Tesla's reputation crisis isn't just about public perception. It's hitting where it hurts the most, the stock market. The company is in freefall, its stock price tumbling as sales take a sharp dive. Once celebrated as a visionary entrepreneur, Elon Musk is now making headlines for all the wrong reasons, and investors are starting to panic. With Tesla's market value eroding rapidly, financial analysts warn that the worst may still be ahead. The competition is closing in, Tesla's financial risks are piling up, and even its own executives are jumping ship, cashing out of their stock holdings in staggering amounts. To make matters worse, Musk's polarizing public image is adding to Tesla's troubles. Political and consumer backlash is intensifying, transforming him from a tech icon into a lightning rod for controversy. The big question now is, can Tesla turn things around, or is Musk's empire crumbling before our eyes? Before we dive deeper, make sure to like this video and subscribe to Fire Stocks for the latest financial updates that could impact your investments. Turn on notifications so you never miss a critical market update. Even though today was a good day for Tesla stock, the destruction is far from being over. Investors who once bet big on Tesla's dominance are now rethinking their positions, worried that the company's golden era may be coming to an end. Wall Street analysts are slashing their price targets, warning that Tesla is now facing severe headwinds from all directions. Even more concerning is that Tesla's own top executives and board members appear to be losing confidence, dumping over $100 million worth of stock. When corporate insiders start selling at this scale, it's often a red flag, a sign that those closest to the company see trouble ahead. Tesla's market performance reflects a larger issue, growing skepticism about whether the company can maintain its dominance in an increasingly competitive EV market. Once seen as an unstoppable force, Tesla is now struggling to convince both investors and customers that it can sustain momentum. In the past, strong brand loyalty and technological innovation kept Tesla at the top, but those advantages are eroding fast. With consumer sentiment turning negative, major automakers gaining ground, and investors seeking safer alternatives, Tesla desperately needs a new strategy to restore confidence. If the company fails to stabilize its stock soon, the long-term consequences could be catastrophic. Tesla's sales numbers are painting an equally grim picture. Once an unstoppable force in the EV market, the company's rapid growth has stalled, with deliveries falling short in critical regions like the US and China. Demand is slipping, and Tesla is now struggling to meet its ambitious production targets. Despite slashing prices and offering aggressive buyer incentives, the company is finding it increasingly difficult to persuade consumers to pick Tesla over its rising competitors. The era of effortless sales and record-breaking deliveries appears to be over. Production challenges, intensifying competition, and shifting consumer preferences are only adding to Tesla's sales struggles. Once celebrated for disrupting the auto industry, the company is now dealing with the same headaches as traditional automakers: supply chain disruptions, soaring material costs, and uncertain demand. The critical question remains: how long can Tesla withstand these pressures before they start eroding profitability? If these negative trends continue, Tesla could be forced to rethink its business strategy, raising serious concerns about its long-term survival. Tesla is no longer the uncontested leader in the electric vehicle space. Chinese automakers, led by BYD, are catching up at an alarming pace. In a stunning development, BYD has now overtaken Tesla as the world's top EV seller and is leading the industry with charging technology that is twice as fast as Tesla's. This breakthrough innovation puts Tesla at a major disadvantage, as today's EV buyers prioritize fast and seamless charging solutions. But BYD isn't the only threat. Chinese brands like NIO, XPeng, and Li Auto are introducing vehicles that outperform Tesla in key areas, often at more competitive price points. Their cars boast advanced driver assistance features, luxury-grade interiors, and superior battery efficiency, all at a time when Tesla is facing growing criticism for scaling back on features while raising prices in certain markets. Tesla has been forced to respond with massive price cuts and 0% interest financing offers in China just to stay in the race. But these desperate measures come at a steep cost. Profit margins are shrinking, and Tesla's overall profitability is under threat. If the company fails to keep up with the relentless innovation and affordability of its Chinese rivals, Tesla's dominance in the EV industry could soon be a thing of the past. One of the biggest setbacks comes from Canada's decision to cut Tesla out of its EV incentive program, a move seen by many as retaliation against Musk's increasingly politicized public statements. With Donald Trump back in office, trade tensions are once again escalating, and Tesla is caught in the middle. Beyond government actions, public perception of Musk is shifting. The same progressives and environmentalists who once rallied behind Tesla as a pioneer in green technology are now distancing themselves from the brand, largely because of Musk's outspoken social media presence and involvement in divisive political debates. This shift has fueled anti-Tesla movements, with activists placing anti-Musk messages in public spaces and calling for a boycott of the company. The backlash is no longer just online. It's becoming a real-world liability, driving away potential customers and damaging Tesla's once pristine reputation. For years, Musk's immense wealth has been tied to Tesla's soaring stock price, but with the company's downturn, his financial standing is starting to shake. In a major development, SpaceX has now surpassed Tesla as Musk's most valuable asset, highlighting just how much Tesla's stock has fallen behind. But the financial risks don't stop there. Musk has pledged a significant portion of his Tesla shares as collateral for loans. If Tesla's stock keeps tumbling, he could face margin calls, forcing him to sell off even more shares at a loss. This scenario presents one of the greatest financial threats to Musk, potentially leading to further instability within Tesla. If the stock continued to fall, Musk's entire empire could be far more fragile than it appears. Public resentment toward Tesla is reaching dangerous new levels. Reports have surfaced of Tesla vehicles being firebombed and even shot at in Las Vegas, raising concerns about the escalating hostility toward the brand. The FBI is now investigating multiple arson attacks targeting Tesla facilities, with speculation growing about whether these incidents are random acts of vandalism or part of a larger, coordinated movement against Musk and his company. Beyond physical attacks, Tesla owners themselves are facing increasing threats. Social media platforms are flooded with anti-Tesla rhetoric, with some activists openly encouraging vandalism of Tesla vehicles. The level of resentment and hostility is unlike anything Tesla has experienced before. If this pattern continues, Tesla may soon find itself grappling with more than just financial setbacks. It could be facing serious safety concerns for both its customers and employees. Tesla's future has never been more uncertain. The stock is sinking, sales are struggling, competition is intensifying, and public sentiment toward Musk is changing rapidly. Once celebrated as the most innovative automaker in the world, Tesla is now at real risk of losing its dominant position in the EV market. The key question remains, can Musk turn this around, or is Tesla's golden era coming to an end? The cracks in his empire are getting wider, and the pressure is mounting. Will he manage another comeback, or is Tesla on an irreversible path to decline? What's your take? Can Tesla bounce back, or is this the beginning of the end? Share your thoughts in the comments, and don't forget to subscribe to Wealth Info Hub for deep financial analysis and breaking news. Hit the like button and turn on notifications so you never miss an update.